All right, everyone. So we're ready for our January market update to see what's going on in the single-family residential world in Bakersfield. We got the statistics coming out for December, kind of giving us a good look at how the year ended and maybe a little bit of what we're looking forward to over the next couple months. So in December, active listings on the market dropped down to 652 from the previous month of 799. So we are seeing a little bit of tightening of inventory here in Bakersfield. New listings taken dropped to 291. The month before that, we had 400 new listings taken. The month before that, 531. And it was all the way up to the peak at 794 new listings that was taken in June. So we've been very quickly actually dropping on the pace of new listings coming onto the market. Which means that the inventory is starting to slow down a little bit. Our solds are a little bit up from last month, 355, compared to the 319 from the month before in November. And pendings are pretty much the same, 338 as opposed to 333 the month before. What this is showing us is inventory is starting to come back down, not necessarily because there's more buyers buying, although it's starting to even out a little bit. Our solds and our pendings are starting to steady out a little bit more, but the new listings on the market is just coming down very rapidly, and I think that's what's surprising a lot of people. That's why the prices aren't necessarily crashing quite yet, like they expected to, with the interest rates being so high and the buyer demand coming down off of the summer and the spring numbers, is because the inventory has also come down. So demand has come down, but inventory has matched that demand, and it's coming down as well. That's shown also by our months of inventory. How many months of inventory do we have left on market? We are down from last month, which was 2.5 months of inventory, down to 1.8, which is what we saw in July and in September. Now it's still higher than where we were in the spring, where it was about 0.6, 0.7, somewhere in there, and it's a very, very tight seller's market. We're at 1.8, so we're still higher from there, but we're off of our highs that we saw in November and December and back down to where July and September was, just because mostly the inventory is coming down. Buyer levels are pretty much the same. Now, as far as price goes, the average price for sold properties in Bakersfield last month in December was $390,000, up from $388 just the month before. Not very much of a significant move, but it's holding steady. There's not a whole lot of big dips or big spikes or anything like that. Now, something interesting to note is that from December of 2022 to a year ago in December of 2021, we actually we are up by 4.6%. So even with the falling prices off of the 416,000 high that we saw back in April, and it kind of went up and down a little bit, then it kind of fell down into the 379, 380s, back up to 390. Even with all of that craziness that happened towards the end of last year, we still ended the year at a 4.6% appreciation year over year as the average sale price in Bakersfield, which keeps in line with the multi-decade trend of around 4% appreciation every single year. Even with the dip at the end, we still saw right around 4%. Now, what we're seeing now is it's kind of an interesting market. According to David Stevens, the former Assistant Secretary of Housing, he said, "Be advised, this may be the one and only window for the next few years to get into a buyer's market. And remember, as the Federal Reserve data shows, home prices only go up and always recover from recessions no matter how mild or severe. Long-term homeowners should view this market right now as a unique buying opportunity." Basically saying, I think eventually these prices are still going to go back up. We saw a little bit of a dip, a little bit of a correction, but we're still 4.6% over where we were last year. Now, we did still see a spike in 2021 and in 2022 from the past couple of years. We were a little bit higher. We're a little bit above that 4% steady line every single year, but we did have a little bit of the correction again at the end of last year, bringing us back down a little bit more towards normal. And a lot of the experts are saying that they're not really seeing it to crash that much farther below. Now, of course, no one has a crystal ball. We can't see that. It very well might happen, especially if inventory goes back up to where it was. If we get a flood of listings in the spring and the summer and the buyer demand kind of stays the same, then we very well might see prices continue to go lower. But what we're seeing right now is that inventory is actually coming down lower, less and less sellers are actually putting their houses on the market. And now that interest rates are coming down a little bit, now we're starting to see a little bit more of that buyer demand that's going to start to bring back up the pendings, bring the solds back up, and potentially continue to squeeze prices a little bit higher. Now we might stay steady for a little bit. If as the spring market comes on, we typically do see a few more listings come back on the market. Maybe it'll match and maybe we'll start to spread out. But if right now we're still less than 2 months of inventory on the market, and we might see that go a little bit further. We really don't start to see a neutral market until 3 to 6 months of inventory. We're still a little bit of ways away from there, but as of right now, we're still in a seller's market, still have tight inventory, and until we see something otherwise where we get a lot of new listings come up, that's probably going to be the way that it is. A little bit of slower buyer activity, but slower seller activity as well. Maybe just a little bit of a slower market and a little bit more of a steady, stabilized market over the next couple months.